What's up, everyone? Welcome to OfferVault News. I'm your host, Eddie Grand, and last week I was at Affiliate Summit West 2020 at Paris, Las Vegas, Sin City. It was an awesome time. I hung out in the OfferVault VIP Lounge. Shout out to our sponsors, Max Bounty and Ringba. They're awesome. We at OfferVault highly recommend you work with both of these incredible companies. I definitely got a little spoiled in our VIP lounge. There was good food, there was an open bar, they had massages, and even airbrushed t-shirts. I had such a fun time at ASW. Shout out to all the amazing people I saw and met. OfferVault hosted the Paper Callers Party with Ringba. Not gonna lie, it was one of the best parties of the conference. The line was literally around the corner. And we couldn't have done it without the help of our sponsors, Ringba, Trillion, Market Call, and PaperCallMarketing.com. Make sure you get in touch with them because they're all outstanding. I attended my first affiliate ball. OfferVault's own Josh Sebo won an AFI award, and Darren D. Money himself popped the question to his fiancée. It was a memorable night, to say the least. I'd also like to thank everyone that took the time out of their busy schedule to sit down with me for an OfferVault News interview. It was such a pleasure meeting all of you. The interviews couldn't have come out better, and you can find them soon on our YouTube and Facebook pages. ASW 20 was a lot of fun, and I can't wait for our next conference. If you'd like to do an interview with me at a future conference, then email us at tips@offervault.com and we can definitely set something up. For our main story this week, website caught selling fake reviews of financial products. But first, here's a rundown of the top headlines this week. Privacy changes will impact Facebook's ad revenue. The good news for Facebook is that they just reported another record quarter last week. But the bad news? New privacy regulations will limit ad targeting capabilities and slow future revenue growth. The company announced $21.1 billion in revenues for the fourth quarter of 2019, a 25% increase year over year. Advertising continues to account for almost all of Facebook's revenue, and it reached $20.7 billion, also a 25% increase from the fourth quarter of 2018. Here's the thing though. This was the fourth consecutive quarter in which Facebook's ad revenue growth was below 30%. In fact, Facebook executives told investors to expect Facebook's revenue growth rate in the first quarter of 2020 to slow down compared to last quarter's 25% growth year over year. Factors driving this deceleration include the maturity of our business, as well as the increasing impact from global privacy regulation and other ad targeting related headwinds, CFO Dave Wenner said on the earnings call. He noted targeting and measurement limitations from browsers limiting third-party signals, the company's own moves, such as the rollout this month of off-Facebook activity controls, and privacy regulations such as GDPR and CCPA are still to come. Facebook will continue to focus on commerce moving forward. The vast majority of activity is commerce ads on Facebook, according to COO Sheryl Sandberg. The company plans to continue improving and expanding its checkout capabilities on Instagram and Facebook for users and businesses, but they will require full integrations and will take time, Sandberg said. Facebook recently expanded shopping ads to all advertisers globally, but Sandberg cautioned that it will continue to move slowly in commerce. So most advertisers will have to keep waiting on initiatives like checkout to roll out more fully. While Facebook continues to invest heavily in growing its commerce experience, advertisers will have to be patient as the timeline for e-commerce enablement seems to be a long one. One thing that's for sure though, there are going to be a lot of changes within the online advertising industry with these new privacy regulations rolling out, browser crackdowns on third-party cookies, and heightened scrutiny over data practices. Facebook's warning of slower ad growth is a clear sign to online advertisers of what lies ahead. Beyond Facebook campaigns, advertisers should anticipate changes to and limitations on the levels of targeting and attribution that many have previously taken for granted. How do you see these new regulations impacting affiliates? Let us know what you think in the comments section below. Forbes search traffic tanks after Google algo update. A senior writer at Forbes shared some data on Twitter showing that Forbes.com has seen a huge and very concerning drop in traffic from Google organic search. He posted on Twitter saying, seeing huge hits to Forbes ranking and traffic since the new Google search algorithm was applied. Any idea if there's a problem? Some articles not reaching 100 views in 24 hours. This was tweeted out on January 27th, which was well after the official January 2020 Google Core update, and also after the featured snippet deduplication change. So it seems a little late for this to be caused by the algorithm update, but then again, it's hard to know what the exact cause is with all the recent changes happening with Google. The writer's findings were based on his own traffic reports for his own stories at Forbes, but he said it's being corroborated by other writers that were complaining about the decline in traffic as well. Of course, the Forbes writers are quick to point the finger at Google, but another possibility is that Google could be punishing Forbes like they've done in the past. Back in 2011, Forbes was even penalized for selling links on their site, which goes against Google's guidelines because it distorts page ranking. Was this recent drop in Forbes search traffic caused by Google's algorithm update, or could it be the consequence of dubious SEO tactics? We'll let you decide. Join the conversation in our OfferVault official Facebook group and in the comments section below. Racist troll faces $13 million fine for robocalling spree. The Federal Communications Commission is preparing to fine a Utah man $12.9 million for conducting a string of racist robocalling campaigns across the United States over the last 2 years. The FCC says one of the campaigns seemed like an attempt to tamper with the jury in an ongoing case, and another targeted a newspaper for criticizing his earlier campaigns. Shortly before the 2018 election, Scott Rhodes reportedly made 766 spoofed robocalls in Florida where Black Democrat Andrew Gillum was running for governor. According to the FCC, robocalls falsely claimed to be from the candidate and used a caricature of a Black dialect with jungle background noises. Not just illegal, but repugnant and despicable. Not long after that, in neighboring Georgia, Rhodes allegedly made 583 spoofed calls attacking Stacey Abrams, another Black Democrat running for governor. Rhodes also placed more than 2,000 robocalls in the Charlottesville, Virginia area around that same time. A jury there was considering the fate of James Fields, a man who killed Heather Heiler with his car the day of the infamous 2017 Charlottesville protests. The calls articulated a racist and anti-Semitic conspiracy theory that blamed local Charlottesville officials for Heiler's death, the FCC says. The judge asked jurors if they received the calls and instructed them to ignore them. The FCC claims that Rhodes violated a 2009 Truth in Caller ID Act, which makes it illegal to spoof caller information with the intent to cause harm. Rhodes allegedly used an online platform to falsify the caller ID information to make it look like the calls were coming from local numbers. Technically speaking, the FCC's action was a notice of apparent liability for forfeiture, which means that it's a first step toward fining Rhodes. He'll actually have a chance to rebut the FCC's allegations before the agency can formally impose the fine. And of course, there's no guarantee that the agency will get all or even half of the $13 million it's asking for. Rhodes may not have anywhere close to $13 million in the bank, and he may resist paying whatever money he does have. Also, as we've previously mentioned on this show, The FCC has a notoriously poor track record when it comes to collecting fines against robocallers. The newly passed Traced Act is supposed to change that, but I guess for now, only time will tell. Will this racist robocaller face justice, or will he get off with a slap on the wrists, as many robocallers seem to? Comment your thoughts below. We want to hear from you. Popular personal finance website LendEDU has long touted itself as an impartial source of reviews for student loans and other financial products. On the site, you can find rankings based off of different reviews, but according to a complaint by the Federal Trade Commission, these so-called unbiased rankings are actually paid placements. For our main story this week, website caught selling fake reviews of financial products. The operators of Delaware-based LendEDU have agreed to a settlement with the FTC after misleading consumers to believe their website provided objective product information when in fact they offered higher rankings and ratings to companies that paid for such placements. The FTC also fined LendEDU $350,000 and banned it from making false claims about the site's paid rankings. LendEDU told consumers that its financial product rankings were based on objective and unbiased information about the quality of the product being offered. But in fact, LendEDU sold its rankings to the highest bidder, said Andrew Smith, director of the Bureau of Consumer Protection. These misrepresentations undermine consumer trust, and we will hold lead generators like LendEDU accountable for their false promises of objectivity. According to the FTC's complaint, the operators of LendEDU.com falsely claimed that the website provided objective, accurate, and unbiased information about consumer financial products such as student loans, personal loans, and credit cards. Specifically, LendEDU misrepresented that the information on its website was not affected by compensation from advertisers. The site did more than just lie about its rankings. It also allegedly tried to boost its own ratings by having employees and friends and family of employees write positive reviews on other ratings sites. Get this. Of the 126 reviews for LendEDU on the consumer review site Trustpilot.com, 90 of them were 5-star reviews posted by LendEDU associates, the FTC said. The complaint names Nathaniel Matherson and Matthew Lenhard, co-founders of ShopTutors, LendEDU's parent company, and Alexander Coleman, LendEDU's vice president of product. The FTC does not name any lenders who allegedly paid for rankings. This screenshot from the government announcement shows SoFi at the top of a LendEDU ranking, followed by Earnest and LendKey. As of this week, if you check the site, SoFi does not appear anywhere on LendEDU's rankings. Earnest is the top-ranked lender, while LendKey is 7th. The rankings also include a brand new disclaimer at the top that reads, "All companies seen in the table below are LendEDU partners who provide compensation to LendEDU. This compensation impacts where products appear in the table below." They were real quick to get that disclaimer up. This isn't the first time ShopTutors, LendEDU's parent company, has been accused of misrepresentation. In 2018, the Chronicle of Higher Education revealed that Drew Cloud, a perceived expert on student loan debt who was widely quoted in the press, was actually a fictitious person. ShopTutors were the ones behind Drew Cloud. The student loan refinancing company invented a completely made-up person that was used to run a website claiming to be an independent, authoritative news outlet covering all things student loans. In fact, one of the co-founders of ShopTutors said in a statement to the Chronicle of Higher Education that Drew Cloud is a pseudonym that a diverse group of authors at the Student Loan Report LLC used to share experiences and information related to the challenges college students face with funding their education. So they admitted that they created this fake person. ShopTutors has a history of lying about being an objective and authoritative source of information for financial products. And now they just got caught again. Will this FTC action deter ShopTutors from being deceitful in the future? Let us know your thoughts and feedback in the comments section below. Also, be sure to join the community in our OfferVault official Facebook group. Make sure you subscribe to our YouTube channel and like our Facebook page so you never miss a new episode of OfferVault News. As always, I'm your host, Eddie Grand, and I want you to email us your dirt. Tell us about people running scams, people who didn't pay, companies doing horrible things. We want to know about all of this. Tell us about changes in the industry. Contact us at tips@offervault.com. Once again, that's tips@offervault.com. All submissions are entirely confidential. We want to hear from you, so don't hesitate to reach out. Eddie Grand, closing out this week's episode of OfferVault News. We'll see you next time.